lot of, let's just say business owners in general, one of their strategy is to be paper poor, right? They don't want to show a lot of income, but I know for getting a mortgage, that's not super helpful. So this might be, really basic, but, I think a lot of people don't think about that. So do you kind of work with business owners in that, to that period where like, hey, Phil, I'm thinking about, I want to get a property soon. And you're like, what's kind of your advice that you give to them?
Pre-COVID, bank statement loans was hot, and I would do a good amount of them. We were good at them because I like to do, obviously, like with reverse mortgages, the ones that other people don't like to do. Just like VA. As a veteran, I said when I came back in 2017 to doing forward mortgages, anything that's not reverse, I said I'm going to be good at VA because I'm a veteran and I'm going to build that. And it's blowing up for me with VA. And those are things that people don't like to do out of the norm. The bank statement loans we learned how to do, and they were really good. Their rates were getting down in the 4s and 5s. So someone like you or me, business owners, could say, I make $50,000 a year when you're really bringing in 200, 300 that you're living off of. So you can't qualify for the house you want. We look at the deposits in the bank statement minus the expenses, the real expenses, not the accounted expenses, and you qualify. Well, COVID came, and anytime you have a recession, the secondary market that buys mortgage bonds after they close and they're packaged and they're sold and securitized, they only wanted the best paper, the best mortgages, the ones where people had the best scores and best income and everything. The non-QM, the non-qualified mortgage bank statement loans were gone. They've come back, they're trickling in, but now 7% rate, lower loan to values. So now more than ever, anytime you hit a downturn, you need to show enough income to qualify to take advantage of stuff. And you need to have enough cash too, which, to wrap this question up, something I'm seeing a lot of is people wanting to, and I said it in early March, I made a Facebook Live, I said, you need to cash out now. People waited too long, they wanted to cash out on paid off properties. I think, and I tell people all the time, rates are in the 2s now. If you can get a mortgage in the 2s, you don't necessarily want to pay it off fast. Why? You can put that money into a retirement fund or another property. So the whole idea of having a paid off house to cash out later really is hurting people in today's market.
Yeah, so you'd rather leverage that debt and not just be rushing to pay it off.
I want 5 properties, throughout Florida, different coasts, keys, with rates in the 2s, where I put very little down, and I have a nice 1-year reserve where I know instead of putting a lot down and putting extra, I know when the next whatever hits that maybe kills mortgages like it did 12 years ago, that I'm good. I can pay everything for a year. And that's an approach that I would do myself and tell people that's an option for you.